The US dollar is expected to close the current week with a rise. The Federal Reserve decided to switch to a less hawkish stance and slackened the pace of the key rate hike. This should have led to a decline in the greenback. However, the Fed's chair made an announcement that forced the market to reverse. The fact is that the regulator intends to raise the benchmark rate to 5.1%, which exceeds initial forecasts. A higher interest rate is a positive factor for the US dollar. In our video review, we are going to find out what events will shape market sentiment early next week. The upcoming week could hardly be compared to this one. There will be no important events like meetings of the largest central banks. However, it's not that bad since it will be easier to predict currencies movements and market volatility. It means that it will be possible to determine accurate points to enter and to leave the market. On a Monday, traders will be focused on the Japanese business climate data. According to the forecast, the indicator may climb to 87.2 points, still remaining far from the average level of 100 points. In other words, Germany's economy will hardly have a reason for a confident recovery. On a Tuesday, traders that prefer the Asian-Pacific session will get information about the Reserve Bank of Australia's key interest rate decision. The regulator has been slackening the pace of the key rate hike for 3 meetings in a row by raising it just by 25 basis points instead of 50 basis points. And this is how the regulator shows that economic growth is much more important than inflation. The Reserve Bank of Australia is combating inflation without creating obstacles for consumers and businesses. Notably, the Bank of Japan has chosen the same approach as the Reserve Bank of Australia, while central banks of all developed countries switched to aggressive policies. The Bank of Japan was maintaining the ultra-loose monetary policy. The situation is unlikely to change. Thus, on Tuesday, the regulator is expected to keep its interest rate at minus 0.10%. Against this backdrop, the yen may show a short-lived decline. In the first part of the week, the macroeconomic calendar is not reaching events from the United States. Traders may only focus on the building permits data for November. The report is likely to unveil signs of a recession as the number of permits may drop again. The indicator has already reached the lowest level since June 2020, and this could be explained by higher prices and a rise in mortgage rates, which have an extremely negative effect on demand and consumer activity. On Wednesday, traders will learn about consumer activity in the Eurozone's largest economy. Thus, Germany will disclose its consumer climate data for January. Judging by the forecast, consumer sentiment will just slightly increase since consumers are still saving money, expecting a jump in energy prices in the next few months. This information is unlikely to boost demand for the euro. Also on Wednesday, Canada will publish data on its consumer price index. The report is likely to show a slower pace of a consumer price growth. Notably, the Bank of Canada also decided to slacken the pace of their key rate hike. The expected slowdown in inflation growth may intensify expectations of a more dovish monetary policy tightening or even the end of this cycle. This in turn will have a negative influence on the Canadian dollar. You have watched Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading and waiting for you on our channel with a new video. See you soon!